Welcome to the deep dive. Today we're tackling some really interesting material.
We are. It's an analysis piece from CNN Business.
Yeah, published June 4th, 2025. And our mission, as always, is to dive deep into this source, pull out the key insights on trade policy, tariffs, where things stand months into the second Trump administration.
And the article kicks off with a really central question.
It does. Basically, with all the warnings we heard, why does it feel like the big tariff disaster hasn't quite landed? Well, not for everyone anyway.
Right. That perception is key.
Okay, let's unpack this.
And our deep dive is going to look at exactly why the source thinks that perception exists.
While also looking at the actual impacts, the stuff that is being reported.
Exactly.
Okay.
Because there's a contrast there.
Right. The analysis points out, if you're not directly in manufacturing or shipping or relying heavily on imports.
Then maybe things don't feel catastrophic.
Challenging, maybe, but not the total collapse some predicted.
And the main reason the source gives for this perceived lack of a full-blown crisis is, well, it's pretty striking.
What is it?
It suggests the administration has actually blinked quite a bit.
Blinked?
Yeah, leading to what the article calls a watered-down state of tariff implementation.
Watered-down state? Huh. That phrase really stands out.
It does. It implies the policy threats haven't been, fully or consistently carried out.
So the impact isn't hitting everyone with the expected force.
Precisely. And because of that inconsistency, that unpredictability, the article notes markets have kind of learned not to just jump at every big announcement.
Okay, so markets are wary. What about businesses?
They're described as being in survival mode.
Survival mode.
And often the reporting suggests they're just eating the costs of these import taxes.
Eating the costs. That's critical.
Trying to absorb them internally, at least for a while.
But importantly, the article stresses this doesn't mean there's no pain at all. It just means some are absorbing it differently.
Right. It pivots to highlight specific areas where the pinch is being felt quite hard.
Like U.S. factory activity.
Exactly. According to that Institute for Supply Management survey, the ISM One factory activity has actually contracted for 3 months running.
3 months. And the May 2025 survey, the source says, showed tariffs were really top of mind for the managers they talked to.
Yeah, and the article includes some pretty direct quotes from those managers. They sound stressed.
They really do. One respondent is quoted saying the supply chain issues just from tariffs. They're rivaling that of COVID-19.
Wow. Comparing it to COVID, that's significant.
It really puts it in perspective. And another manager said, let me find the quote here, government spending cuts or delays, as well as tariffs, are raising hell with businesses. No one is willing to take on inventory risk.
Raising hell. And that fear about inventory risk, that really speaks to the uncertainty, doesn't it?
Absolutely. If you can't predict costs, you don't want to hold stock.
And the article even points to a related headline that just says it outright. There's no denying it now. Tariffs are raising prices.
So even if businesses try to eat the costs initially.
The overall pressure is pushing prices up. It has to, eventually.
Okay, so clear pain points in manufacturing, supply chains, prices. What about the administration's deal-making? The article looks at that too, right?
It does. And it notes that despite that big barrage of tariffs announced back on April 2nd.
Yeah.
Well, according to the analysis, there hasn't been a single substantive deal reached with any major trading partner since then.
Not one. But weren't there promises, like dozens of deals within 90 days or something?
That's what the article points out. The promises were there, but the deals haven't materialized according to the source.
And the article says this is starting to be a bad look.
Yeah, especially given the earlier talk about how other countries were supposedly desperate to make deals with the U.S.
Right. That gap between the talk and the results.
It's a key observation in the piece. And then there's this recent move by the U.S. Trade Representative's Office, the USTR.
Oh, yeah, the letter.
Exactly. The source describes it as an apparent sign of the administration's impatience. They sent a letter to all U.S. trading partners.
Asking them to submit their best trade proposals.
By June 4th, the day the article came out.
A deadline of today. That's abrupt.
The White House press secretary, Caroline Leavitt, confirmed it, calling it a friendly reminder, according to the source.
A friendly reminder with a same-day deadline. And the article notes something interesting about that deadline.
That its origin was not clear.
Right. Which fits this pattern the source suggests, where trade policy seems made up and modified on the fly.
That phrase again, made up and modified on the fly. It really captures the sense of unpredictability.
Yeah. And Reuters apparently reported on this letter too, suggesting it showed an urgency within the administration.
Urgency may be driven by those self-set deadlines not being met.
Seems plausible.
Yep.
And what about specific relationships? China, Europe.
The article gives a quick update. The 90-day truce with China is reportedly under strain after the president lashed out recently.
Okay, so tense there.
And talks with Japan and the EU. Progress described as limited.
So still no big breakthroughs reported anywhere, really.
Seems that way based on this analysis.
Okay, so we've got this backdrop. Unpredictable policy, manufacturing pain, stalled deals. How are the financial markets handling all this uncertainty?
Well, the source suggests they're often looking for inspiration elsewhere.
Like focusing on strong company earnings, maybe?
Exactly. Good news where they can find it. While also, and I love this phrase the article uses, praying that the administration will back down from its most extreme trade threats.
Praying. That really sums up the tightrope walk, doesn't it?
It does. And the article gives an example from the Tuesday, just before it was published.
What happened?
Stocks dipped early on. The OECD had just warned, again for the second time this year, that U.S. growth would likely take a hit from tariffs.
A clear warning sign.
But then, later that same day, the market recovered.
Why the turnaround?
Fresh data came out showing the labor market was still resilient. That seemed to lift the mood. Tech stocks led, and the major indexes actually finished positive in the black.
So it's that push and pull again, acknowledging the tariff risk, but latching on to other positive signals when they appear.
Right. And even companies doing well, like Walmart, the source, mentions their solid quarter, even they were still warning about.
Higher prices and tariff uncertainty.
You got it. It shows that even if the overall market finds reasons to be optimistic some days, the tariff issue remains this persistent background concern for actual businesses.
Which leads us to the bottom line conclusion in the article.
Yeah. It states pretty clearly, the pain is here. It exists, even if you, listening, don't directly feel it in your day-to-day right now.
And then there's that almost paradoxical point it makes.
Right. It suggests the administration's powerful need to not be held accountable.
Which the article implies leads to the waffling, the not fully implementing the threats.
That this very inconsistency has weirdly been a kind of blessing, oddly defined, for the economy.
A blessing. How? That seems counterintuitive.
Well, the implication is that by not going full throttle with the harshest tariff measures consistently,
it's actually prevented the absolute worst-case economic scenario from happening.
that seems to be the source's argument. The unpredictability, while bad for planning, might have ironically softened the overall blow compared to a rigid, fully enacted tariff war.
So the uncertainty itself is damaging, but maybe less damaging than full certainty of the worst threats being carried out would have been?
It's a really complex dynamic the source is outlining there.
Okay, so wrapping this deep dive up, the source really paints a picture of an economy, of businesses stuck in, what did it call it? Limbo.
Yeah, basically operating in limbo, constantly reacting to this unpredictable, partially implemented tariff policy.
And we've seen the key takeaways from the article. The manufacturing contraction.
The lack of any big trade deals, despite those deadlines.
The unusual communication tactics like that letter.
And the mixed signals in the financial markets, resilient one moment, anxious the next.
That phrase, made up and modified on the fly, just keeps echoing, doesn't it? It feels central to the whole situation described.
It really does. And you have to think about what that means for businesses trying to manage complex supply chains or decide whether to invest. Operating under that constant uncertainty must be incredibly difficult.
So here's a final thought, drawing from the source for you to consider. We heard businesses are facing supply chain issues rivaling COVID-19 and that tariffs are raising prices, according to the analysis.
Right, even with this so-called watered-down implementation.
So if that's the case now, what does this persistent state of policy uncertainty, this made-up-on-the-fly approach, mean for the economy's health and stability in the longer run? Even if the absolute worst predictions haven't come true for everyone yet.